Moving on to IT services and what happened there in 2025 and throughout the years. I think here we're showing the median EV/EBITDA multiple for software development companies and IT consulting companies. And software development companies are companies like EPAM Systems, Endava, Globant. They're mostly offshore developers. They've been growing quite fast over the recent couple of years, especially during COVID, uh, doing product development, software engineering, and so on. And IT consulting are more traditional, established old companies, Accenture, Cognizant, CGI, and so on. And the theme of this year, or maybe past 2 years, has been really convergence for me that doesn't matter if you're in software development or IT consulting, it's still all one industry, IT services. So investors kind of start to analyze those companies similarly, that they are having similar growth rates right now. They have similar profitability margins. They do a bit different service, but in the end, it's a project or project business or time and material business, which is about implementing IT for larger organizations. And this convergence continued across geographies as well. I think also people are realizing it doesn't matter too much where you're located, if it's India, Europe, North America, or anywhere else in the world. So all those valuations are kind of slowly coming together, moving to around 10 times EBITDA for the biggest publicly listed companies. And business model or location becomes a bit less relevant. But some things are becoming more relevant, and we took a look at this in our next slide to try and understand what's been driving the best performers and underperformance, because on the high level it kind of looks rather flat or not moving too much, but actually if you look under the hood and see who's performing very well, who's not performing very well, you can see some patterns. And it is not the geography or business model which is important, but rather your industry, your verticals that you're in. For example, we saw last year space and defense performing very well. There's a lot of investment there. Cybersecurity, same. Healthcare. While on the other hand, some companies which are more generalists, and here you can see those on the right, general software development and consulting, they declined quite a lot. And a lot of that is from multiple going down to some more realistic levels. And you might have seen here at the peak, I don't know how some companies were valued at 40 times EBITDA, probably a very big growth rate that everyone thought just gonna continue in the future. Now that is coming down and everything is converging, and IT services businesses, I think, on public markets, on private markets, in the US, in Europe, across business model are kind of being valued more similarly. And here on the next slide, we have a summary of kind of our view of valuations right now privately and what is really important for your exit. Yeah, so as we said, it's internal company metrics and your company's characteristics that are becoming much more important. So revenue size, of course, it's the best to have scale. You have more investors who are interested. Strategic investors may be more interested. If there is not enough scale, it's usually a difficult process, and you have to find buyer for a long time. Then revenue growth is in IT services businesses rather difficult to come by. You probably need to be related to a very fast growing vendor, or just hire a lot of people, or be in the right place in terms of your vertical. So anything which is above 20%, I'd say, is quite good for IT services. Same for profitability. 20% plus is very good margin. I think what we saw, especially for public companies, that the profitability declined. If it was 15% a couple of years ago, now is 11%. So everything which is like 15% is quite good, 20% is best in class. Same with recurrent revenue, very important point for IT services businesses. If you're only project based, it's quite a tough sell because you need to constantly refill your pipeline with new projects. And if you're working with enterprise clients on maintenance projects and they go on for 5, 10 years, and it's obviously great. Customer concentration is a big point. There are a lot of businesses which are great businesses. They have all the great KPIs, but they just work with one or two customers, and that's a very tough sell usually, or very big discounts to valuation multiple. And finally, technology stack, which largely decides all the KPIs that are here above. Yeah, it's difficult to grow if the technology stacks that you're working with is not popular. So here we showed what on the left-hand side is legacy and AI disruptible. So something like UI, UX front end, where people, investors expect less demand for that or just lower value add from that. That's quite difficult. Kind of middle of the road, bread and butter, backend development, SAP, Salesforce, all kinds of enterprise software systems integration of that. And then the best is just new and shiny tools, companies that are growing themselves, growing in terms of their software revenue and growing their partnership ecosystem together with them. Here, example, Databricks or Snowflake. We're hearing quite a lot from investors that they're interested in acquisitions there, and probably there's much more interest in acquiring those companies than are actually companies that are doing that and that have the scale. So that's in a nutshell about IT services. Valuations converging, country business model becomes less important. Your KPIs become more important. That would be my summary of the year. Marcin, anything to add?
Yes. Yeah, it's interesting to see. The world is becoming more flat, despite, especially in IT services, despite all the geopolitical turmoil. Also, the US visa situation, I think, made it more interesting to buy companies that do offshore work. That was a big development. So we're seeing actually a lot of interest in IT services. And yeah, I think what is also important to note, and the last 2 years weren't great for small and medium-sized companies alike. What we are seeing right now is that they tend to be picking up. They either started earlier this year and they can see the results already of recovery, or they are ramping up and hiring new people right now, because it seems the demand has picked up after the slump. Maybe this is a bit of a disenchantment that AI doesn't solve everything, and and you actually need people to do the work. And I think a lot of your attention of senior management went into experimenting with AI that hasn't really delivered results. So now people who are doing actual work have to come in and get stuff done again.
Yeah.
So that would be my take.
Yes, I think one more point that you mentioned is convergence between countries, and the rates are also probably becoming more similar, or as the countries that were previously quite cheap, the salary growth just converges the rates across different countries, and
Yeah.
IT services business in Poland or Brazil or I don't know, India or Philippines. Yeah, it's the same type of business essentially.
Yes. 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 I mean, there are low-cost countries. I think so long as cost of living is varies between countries, the salaries will vary and the rates accordingly. But I would say I knowing founders and companies across the globe, uh, the standard of living is very similar in the lifestyle of software developers, consultants, mm, even though the rates may vary. So if it doesn't match, basically their standard, they move essentially. But even if you make 5 times the money in San Francisco, still the standard is the same because everything is so expensive there. So it's very interesting to see that this dynamic.